In today's video, I'll share with you 5 reasons to buy the new Yieldmax fund that launched for Exxon, XOMO, but I'll share with you also why you should keep it underweight in the portfolio. If you stick around to the end of the video, I'll share with you how to maximize Exxon with XOMO. So we earn over $100,000 per year in dividends at this channel, and my performance and value shows that I'm up 39% for the year. 39%. The SP is at 15, the Dow is at 3, and the Nasdaq's up 30%. We're also at 0.68 today on a daily basis, which is beating the indexes, as you can see above. So we're beating the indexes on both a daily basis and on a year-to-date basis, collecting both dividends and capital gains, living financially free out of our brokerage accounts. It's really unusual to see this amount of dividends of over 100,000 plus this performance of 39%. But it can be done if you know how to use margin and if you know how to tie your investments to the indexes. If you want help living financially free out of your brokerage account, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guide, you get my phone number to call me anytime at for help, as well as free access to my Discord chat room where I alert you of the Cornerstone rights offering announcement because Cornerstone is the largest position in my portfolio. And also, I give you my daily portfolio recap channel here where I spend most of my time at when I'm not making videos on YouTube. Also with Discord, you get access to these other brokerage channels like specifics on brokerages here, the drip for Cornerstone, all things margin related tab. We even have a Yieldmax section here. But all these brokerage channels at Discord are very important because every brokerage account is different and not every brokerage has the drip for Cornerstone or the same margin rates. Some brokerage accounts don't have the maintenance that you want to see. And I'll get into what maintenance and all that means in 1 second. So if you want access to Discord separately, I'll link that in the description below. So let's go ahead and get into the 5 reasons why you should buy Exxon, in my opinion, through XOMO. First of all, Exxon is a best of breed. So I like buying anything in the portfolio that's a best of breed, okay? It's going to anchor my portfolio some, and who doesn't want best of breed blue chip names, okay? And this XOMO play should have a bigger yield than Exxon. Plus, Exxon doesn't move that much, so XOMO should be pretty stable for us, okay? So I like the best of breed nature in Exxon. The second reason why I'm buying Exxon, XOMO, is because of the low maintenance. If we go here to Exxon, you'll see that I have 5,000 in it approximately, okay? XOMO, there it is. Okay, we have about 5,000 in it. All right, now if we go to the trading tab, you'll look at the margin maintenance requirement and see that the maintenance on this fund is actually 30%, which is really good. Most Yieldmax funds are 50%, as you know, at E-Trade. Every brokerage account is different. Again, others in Discord can share the differences with you in their brokerage accounts. So 30% maintenance, this is huge. This means that I can buy 100,000 of Exxon and only 30,000 of my equity is taken up. Whereas most Yieldmax funds, if you buy, let's say 100,000, then 50,000 of your equity is taken up, okay? So this equity number right here is very important. This 187,000, yes, my market value is 474, but I don't care about that because I just collect dividends and I own the shares and I never sell the shares of my holdings. So I don't care what my market value is as long as my dividends stay the same. However, if your available withdrawal number falls to 0, then you're in a margin call, okay? So my available withdrawal won't get to 0 anytime soon because it would take over a 30% correction in the market to trigger a margin call for me. But I have short options in case that were to happen in 1 month. I have these put options that you guys know of at the bottom. Here are my put options, okay, SPY and QQQ. So I stay hedged with these put options. I'm going to add to QQQ today because my put options are getting hurt to start the month, but I'm only down a couple $100, so I don't mind. So that's how I stay protected from a market crash. Everyone in the comment section says, oh, when you use margin, be aware of a market crash. Well, in a crash, I would make more money in my options than I would lose in the portfolio. And if we have a 30% correction over the course of a year, well, then my 20% dividends in Cornerstone make me only lose 10% because 30% down for the year minus 20% dividends in Cornerstone, and you're only down 10% for the year. Everyone also wonders, why do I talk about Cornerstone so much? Well, because I'm using margin. So if I'm using margin, I need to know that I'm protected in case the market falls. And I need to know that I can pay my bills in case the market falls because SPY does not pay your bills when you're in a bear market. So I keep so much in Cornerstone because it keeps its 20% dividend intact for the year. Yieldmax funds dividends can fluctuate as the stock price fluctuates. So I know I'm going to get my 20% from Cornerstone safely, okay? And I know Cornerstone is a 5-star fund. So I'm going to rely on Cornerstone to pay my bills and to get me out of a market correction. If we're down 20%, I'm going to break even because of Cornerstone. Look here at this chart. Cornerstone beat all of the indexes. So you got to stop asking me, how is it beating the indexes? Well, factor back in the drips and factor back in the dividends, okay? Cornerstone drips here, okay? The $8 market price that you see here, it drips down at 6 every month. So 663, that's a 23% gain. 642, 27% gain. 627, 30% gain. So you can say that you skipped through this part of my video and that you don't like me mentioning Cornerstone, but you have to learn how to ask for the special drip, and you have to learn how to play it for its rights offering. What you do is you sell before the rights offering and you buy back after to reset your dividend yield. Are you listening to me, all of the detractors on my channel? Yes, I'm always defensive about this because you guys hate it when I mention Cornerstone or margin. You think that I'm going to lose, or Cornerstone's losing, or I'm going to get into a margin call with margin, but simply put, the 20% dividend in Cornerstone breaks me even in a 20% market correction. So you can't say anything about my margin, and you can't say why I'm plugging Cornerstone, because I'm telling you why I'm plugging Cornerstone, because I'm using margin. Okay, since I'm using margin, I need to know that my losses are paid back in the event of a 20% correction. And here we have the Cornerstone rights offering channel, so that when the rights offering does occur in Cornerstone, we alert you here, okay? The over 300 members here at this channel are all staying on top of this rights offering in Cornerstone, and we all know that it's what stands in the way between our success and failure in this fund is the rights offering. Now, you don't have to sell for the rights offering, by the way, but you're going to take a significant hit in your account if you don't sell before the rights offering. So that's how you play Cornerstone for 50% gains per year. I'm not talking about Cornerstone. I'm just talking about all the people who hate me mentioning Cornerstone. They just don't understand how it works. So listen to me when I'm saying you have to get the 30% premiums that averages to the NAV per year, okay? And you got to get the 20% dividend. Okay, that's 50%. And you got to drip it and ask for the special drip, okay? Which, again, on my Discord chat room, we have the Cornerstone drip channel here. Where is this drip? Here's the drip for Cornerstone, where it shares with you the brokers who do the special drips for Cornerstone. So Cornerstone, you just have to learn how to play it. You have to understand this fund, okay? And you can email me for my Cornerstone e-guide anytime you want, okay? Now, again, the reason why I'm mentioning Cornerstone for the last time is because I'm using margin. So when this available for withdrawal number gets to zero, this equity number, this available for withdrawal, you're in a margin call. But my 20% dividends from Cornerstone break me even, whereas the Yieldmax dividends, let's say at an Exxon, they could fluctuate. So they can't necessarily break me even. This is why I have to mention Cornerstone when you're using margin. When you're not using margin, you still need to mention Cornerstone because the Yieldmax dividends fluctuate and the stock market can fall. So you don't know if you're going to break even by the end of the year. You might get a dividend in Tesla of 60%, but the stock could fall 60%. You don't know what that stock can do, but an index does not fall 60% in a year. So that's why I tie all my investments to the index, as I said at the beginning of the video. And Cornerstone is the index. CRF is the NASDAQ, and CLM is the S&P. All right, so moving on, okay? Yes, Exxon is a best of breed, and it's low maintenance, which is key to living financially free out of your brokerage account, okay? Even if you're not using margin, you want to keep this available withdrawal number high so you can just withdraw and spend out of your account, okay? I swipe my E-Trade debit and checking card anywhere I want in the world, okay? I can buy cars, shoes, clothes, whatever I want, a house with it. Okay, some people don't like to invest on margin, but they like to use the margin to buy things outside of their account because the margin is low interest, lower interest than a mortgage, lower interest than credit cards. And my margin interest is 6%. Many of us at the channel and in my Discord chat room have negotiated our margin rates down. So please don't ask how I'm getting 6% interest on my margin. I renegotiated it down twice. Margin doesn't show up on a credit check. You can click sell at any time. So this is why I choose to use debt. How did Elon Musk buy Twitter? He used margin. How do the rich get ahead? They use debt. So you just have to understand debt, have to understand margin. You have to understand the truth with Cornerstone so that you don't leave negative comments on my videos. And also, this is what you need to understand so that you can outperform and get ahead out of your brokerage account. So the third reason why I'm buying Exxon, and I think you guys should too, is because energy is a part of the indexes. It's one of the 10 key components of the S&P, but you need to stay underweight, in my opinion, because energy is only 3%. Okay, so this is the argument I want to make to you about why you should stay underweight Exxon. Okay, look at the chart here. Look at this graph here of the energy weightings. Okay, energy is about 3%. It says here in the S&P. So if energy is about 3% of the S&P, I don't want to have more than 3% of energy in my own account. So Exxon 5,000, we have an Exxon to start, XOMO. So what's my account on 500,000? Okay, 10% would be 50,000. So 1% would be 5,000. So I'm still underweight energy right now, and I'll look to buy more Exxon as dips occur in the share price. But for right now, I'm staying underweight, and I will remain underweight even after we buy on those dips, keeping my position sizes at no more than 3% of the portfolio, because energy is 3% of the indexes. Okay, the fourth reason why you want to buy Exxon is because it acts as a stabilizer against the volatility from our growth plays in Yieldmax. So not only does Cornerstone offset some of the volatility that we experience in our Yieldmax funds in growth, but also Exxon should be like a value play and a cyclical play that offsets, again, volatility from growth plays. So we want the stabilizer, especially when you're in margin. You want anything to stabilize your account. You would like your account to just go sideways every day. Capital gains are just icing on the cake. You don't need capital gains. You just want to collect your 100,000 in dividends uninterrupted. Okay, as long as the market's just staying sideways or staying, barely down or down 20% even, I don't care, because my dividends keep paying my bills and break me even. So you want to have stabilizers in your portfolio. You want to anchor with SPYI, JEPI, Cornerstone, and in this case, we're sort of anchoring our Yieldmax funds with Exxon, because Exxon's not tech, it's not growth, it's more old-fashioned and value and high-quality blue chip that you can find in more of the value sectors, and the stabilizer that it gives is invaluable to our margin process. And also, we're using big scale here of over 500,000 plus. We have about 500,000 account value, plus we have the 300 in debt. So this is big scale. Okay, we're using big scale, around 700,000 to 800,000 of dollars exposed. So we want to keep the volatility small and keep Exxon on as our stabilizer. Okay, the last reason why I want Exxon is because it's a bellwether play. Okay, if energy is going to go up or down, Exxon's going to participate. Not all energy plays participate. I remember being in frac sand in 2018, and as energy would go up, frac sand would even go down. Okay, so Exxon is a guaranteed bellwether to participate in an energy rally, in my opinion. Okay, so you want bellwethers because you want almost guaranteed correlation to the sectors. You don't want to miss out. You don't want to have FOMO. So Exxon, it's a best of breed. It's low maintenance. It's a part of the S&P sectors, one of the 10 key sectors of energy, but you should just stay underweight. It acts as a stabilizer against volatility from growth plays, and it's a bellwether for energy, so you get almost guaranteed correlation with the sector. Okay, now let's talk about how to maximize Exxon with XOMO. This is what I'm doing. So I have Devon, as you know. I have about 3,000 in Devon because, well, again, if I had 5,000 in Devon, then that would be 1% of my market value, and I can't have too much in energy. So I keep only 3,000 in Devon. I don't like to have more than 1,000 in my stocks, as you know, but I was underrepresented in energy, so I kind of went overweight Devon, waiting for a better opportunity to come along to add to an energy play. And Exxon is that bill. It fits that bill. And XOMO, it's also an integrated, it's a refiner, so it's going to act as a stabilizer against oil and gas drilling, which Devon is an oil and gas. It's an E&P operator. They do the drilling, okay? So Devon has more movement than Exxon, so it'll actually give us more beta in the portfolio if you pair Devon with Exxon. And Devon has a 6% dividend, which is really attractive, okay? So you're going to get the dividend from Devon, and you're going to get the beta, okay, which should add to more performance in your Exxon position. So I just want to show you a quick chart of Devon. Okay, look, it's consolidating, and it looks like it could be set for a breakout. It's basing here around 50 a share. Okay, it looks similar to Exxon. Okay, if we go to a chart of Exxon, I think you'll see that Exxon also is looking constructive on the chart. So Exxon, it looks like it's breaking out above all of its moving averages. It's been coiling at around 100. It looks pretty good for a move up to 120 here from 110. So I like Exxon. Okay, I just gave you 5 reasons why I like it. And then I'm pairing it with Devon to get extra performance. And then lastly, I'm going to sell a put on Energy Transfer Partners, which I've already done. Energy Transfer, ET here. So I'm up 21% in this put option and ET. We received $400 for selling this put, and then the $400 kind of offsets what I paid for Devon. So if I paid $3,000 for Devon, now I only paid about $2,500 for Devon. So it paid for some of my Devon, and I'm getting $400 to do this. And Energy Transfer is a pipeline, so I'm getting low volatility there again, even lower volatility than the integrateds in my opinion, and like Exxon's and integrated. Energy Transfer is a pipeline, so it's low volatility. And so I'm diversified here. I have Devon as the driller, Energy Transfer as the pipeline operator, and then Exxon as the integrated. So I'm using all three of these plays, and I'm selling ET, the 400, selling the option on it to also lower my margin by $400. So I'm getting performance from ET barely, but I'm getting some performance. We're up 21% once again. It's conservative performance, but if we sprinkle that in with Devon and XOMO, then we can get really good performance in energy without the risk, without adding the margin debt, and without the volatility. And then dividends over time should cash flow these positions regardless. So the dividend from ET is really high, the dividend from Devon's high, and the dividend from XOMO is high. So regardless of price action in the energy sector, we should cash flow our investments over time. So that'll do it for the video, guys. I hope you liked it. If you liked the video, click like or subscribe. And if you have any questions on how to live financially free out of your brokerage account, email me for my e-guides at aikentod48@gmail.com. And if you want separate access to Discord, I'll link that in the description below. And I'll talk to you soon. Thanks.